following this week's OMO and Treasury bills auction, the T-bills market is trading bullish as unmet demand also from the auction trickled into the market. And for the bond side, the secondary market was mostly bullish this week for the greater part, with active demand seen across securities. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you so much for joining us on the show today. No doubt we had the OMO auction and then we had the T-bills auction. Let's talk about subscription rates and how things have panned out from Monday up until now.
Okay, thank you, David, and once again, Happy New Year. So this week started, on the bullish notes for both markets. We saw yields drop as low as 2053. 2053 it dropped as low as 15%. Like you rightly mentioned, we had the NTB auction, where about 56 billion was offered and sold. The rate dropped from 12 levels to 8.24 levels. Also, at that auction, we saw huge subscription, well over 1 trillion. Was subscription. Like I said earlier, they sold about 56 billion. That same Wednesday as well, we saw OMO auction, about 300 billion was offered across the three maturities, and then 356 billion was sold. So in all, we have well over 400 billion, leaving the market in terms of auction, in terms of liquidity due to this dupe auction win. The significant thing we need to look at on the OMO auction, we saw well over 275 basis point drop. From 17.75 to 15%, and that's quite huge. The system liquidity was also another factor that had played a major role this week. We saw system liquidity open on Monday by about 500 billion. By yesterday, system was in repo, about 350 billion. That, of course, has to do with the liquidity that went out as a result of this auction. So that has actually driven the activity at the fixed income market this week.
Yes. And now, Chuka, we all have our fingers crossed waiting for the first quarter bond auction calendar as well. Now, that's yet to come through, but how are investors leaning, and what might likely pan out for the most part of January?
So what we've seen, is the local players, banks, and then of course, the PSAs are the one majorly active in the both market. So we've seen, a lot of bullish sentiment, especially on the bond side. For example, the 2053 that came out at the last auction, around 18, came out at the last auction, is trading below 15 levels. And so that will tell you the interest there is on that bond. The OMO auction, the OMO bill, the 1 year that came out at 17.75 is currently trading around 9% or 9.5%. So we've seen huge interest, on the bullish interest in both markets, and that is also because of the fact that most banks, are scared of CRR debit, and so they rather invest their liquidity, in available fixed income security products that is available, and that's why we've seen a decline in use broadly.
Yeah, so we're also keeping our tabs on how inflation is also going to pan out for the month of December. Ghana has already released its figures. They're sustaining the slowdown, but we're waiting for that figure, and that should come up sometime by Monday. But we'll have to leave the conversation here for now, Chuka. Thank you so much for speaking with us. That was Chuka Nwachukwu, head of ALM and balance sheet management at UBA.